All right, guys, we're live. What's going on?
Hey, what's up?
Hey, things good?
Yeah, well, everything's good.
Yes.
Yeah.
Well, everything's good here in the room. I don't know about in the economy.
I guess it depends on what side of the track you're on.
That's it.
Yeah.
Exactly. All right, so listen, we're going to dive into this. I do want to start off by saying this. We are not economists, but economists don't get it right anyways. All right, so these are just our opinions, and we're also going to dissect a few articles. So, Quinton, we'll start off with you with a market update. Then we're going to get into some articles that we found that we thought were kind of interesting that we'll share with everybody who's listening. So, 2 million in mortgages, or 2 million mortgage holders expected to face interest rate shocks in the next 24 months. Touch on some private mortgages, universal basic income. Is that shit actually coming? People are talking about cutting rates, Canada's immigration, and then dozens of GTA condo projects that have been shelved due to low sales. So we got lots to cover.
Ooh.
All right,
do it.
lots to cover.
Let's
All right,
do
cool. So let's start off with you, Q. Let's give a market update. We'll touch on Toronto, we'll touch on Durham, and Peterborough.
Yep, perfect.
All right, cool.
So, quick snapshot here. We'll start with Durham if we're looking at year over year. So, this is for October numbers here. So, comparing October 2022 to October 2023, Durham region, we see a 4.2 year over year increase on the price points, with the average selling price right now in Durham at $931,548.
So wait. Prices went up. We're
Up year
all right,
over year.
but so we're gonna talk about that, right?
Yes.
Maybe why?
Okay.
Okay, sorry. Go on.
And then what's interesting, we always like to keep a good view on is the months of inventory.
Yeah.
Right. Right now we're sitting at 3 months in the Durham region. Okay, so technically, can we still say that's a seller's market? Sure, 1 to 3. We're on the very, very last cusp of that, right? Getting into, as we approach 4 months, you obviously get into a more balanced market, okay? Toronto, we see a 3.5 year over year increase with the average price at $1,087,000 with months of inventory 4.2. So now we're hitting that balance sort of territory there, right? And Peterborough, we have an average price right now of $560,551. Now we don't have the year over year. We're in the transition between a couple of sources between Central Lakes and PCAR right now, so that's just in a transition. But we can definitely tell you from our personal experience, there's a softening in those price points there. Okay. We don't have the exact percentage, but it's definitely a softening.
Okay.
And months of inventory there is sitting at 3.6, so we're definitely approaching that balanced market territory.
So high level overview, Toronto's up, Durham's up, Peterborough's down.
Yes.
Okay.
Yes.
What are your thoughts on that?
Well, I guess it depends on where the starting point was. What do we say? October last year, 2022.
Yes.
Okay, so in between, we had price points going up in springtime.
Yep.
And then maybe they tapered off in the summertime. So
And they really ramped up in the springtime there for a bit.
yeah, they really did. And then they taper off in the summertime. They start popping back up a little bit in the fall time.
Which is normal as well too. So we're talking seasonal as well.
Yeah. So are we basically still sitting just a little bit below the spring lift? You know what I mean? We kind of like floating downwards now. It'd be interesting to see what they are in January, come right? Come even February, to see what those numbers are before spring pops up again. So I don't know. Are we kind of we got the parachute out? We're kind of slowly going back down, or is this just regular price appreciation because of the regular no inventory? I mean, which is really interesting because we don't have, what we were saying is, well, what's the seller's balanced and buyer's market as far as days on, months of inventory? Yeah. So what is it? It's 1 to 3 months.
Yeah.
And then 4 to 6 months is balanced.
Yeah.
So seller's balanced, and then 6 and beyond is a buyer's market.
Correct.
So we're really still not there yet, despite what's happening, what we see. So it is really interesting. Then you think, well, that's kind of counterintuitive. Why are prices still going up if like I'm seeing a lot of sold signs out there, right? We know that there's a lot more inventory. We know there's a lot more for sale than there are sales. So I don't know what's the deal there.
Yeah, that's the big thing. I think it's the inventory. So we haven't seen the price pressures yet, right? We probably would have hit the peak like you.
We haven't seen the
to,
desperate
right?
sellers, right?
No, exactly. I think May was about our peak here for this year in terms of the price points, and we haven't seen that desperate seller yet. Obviously, we might get into more of this as we talk about some of the articles where Bob on your street sells for this number. Well, there's the new benchmark, right? And it only takes one to start trickling those numbers down, right? So we haven't, year over year, it's pretty much flatlined, these numbers, 3-4%.
Yeah,
that's pretty much flatlined, right? So it's neutral. Now is going to be interesting because now the interest rates are only starting to make their way through the market. So we haven't seen the true effects yet.
Right. And I think I've heard somebody say it as well, too, where it does take anywhere between 12 to 18 months for these interest rate hikes to actually trickle into the market or move into the market, right?
Mm-hmm. Exactly.
Well, they hurt everything other than your house because as far as mortgages go, anyways, mortgage you're gonna stave off on the restaurant, you're gonna stave off on the movies, you're not gonna buy all the groceries you were gonna buy, right? Whatever it is, but you're gonna pay the mortgage.
Yeah.
Right.
Well, Canadians do, especially Canadians.
Yeah. Canadians going to pay the mortgage, and then what do? Well, wait a second. My house is worth more, so I just refinanced it. I have a little bit of HELOC. I have a little bit of equity, so I'm going to pull that in order to help continue moving along. Oh, wait a second. I got a credit card. Well, wait a second. I got a line of credit, right? So I'm going to keep moving, keep dragging it along up until a certain point. So maybe you're 18 months. It makes sense.
And I bet you as well too that Canadians are also diving into their savings. They're diving into their their retirement funds, right?
Sure.
You hear a lot of it also in the U.S. where they're going into their 401ks, and so that's what they're doing, right? They're taking from their reserves to continue to keep paying these mortgages,
right?
And I think you're going to start seeing that pain in 2024. I should have touched on this as well too. We actually just recently came back from an event, Kathleen Black event, and there was some pretty interesting things that we saw there as well too. So I'm sure we could probably flavor some of that into the conversation as well too today, right? Which I thought there was one that was interesting where, remember when they held off, I think it was on interest rate hikes for 4 months, and then the market took off.
Right.
And so now, if they don't touch the interest rates in the next Bank of Canada announcement, which is in December, and then the next one isn't until
they take a break.
And then is it?
No. It was January, and then they take a break in Feb, and then I think it's back in March, if I'm not mistaken.
I can't remember. No, I thought it was because then he was going to do that presentation at the end of January.
Was it?
Yeah. You take the picture. But anyways, it'll be interesting to see. 2024 is definitely going to be an interesting year, and from even like talking to a couple of the agents on our team as well too, like they are talking to some clients right now where they've bought in 2021 or 2022 and they're trying to sell, they want to sell, but they're underwater, meaning their mortgage is higher than what they can actually sell their home for.
Right.
So it'll definitely be interesting to see where things go. Let's dive into anything else in the market update.
No.
Yeah,
Okay.
so sorry, just going back. January, interest rate announcement, 24th, Jan 24th. Feb is a break.
Right.
March 6th is the next rate announcement, 2024. So we got December 6th, we've got Jan 24, and then we've got March 6th. And then we've got April 10th.
So if they don't touch those rates in December, this is where I think we're going with this. And if they don't touch it again in January, you could really have...
That's 4 holds.
Right, because your next one isn't until March. You could have a very strong spring market.
Yeah, and then you'll think, well, okay, but the banks typically do a rate hold as well, right? So now you're going to get yourself qualified, pre-qualified, and the bank says, hey, no matter what happens to the rates, providing they go down, you'll go down as well. But if they go up, then you've got that rate hold. So still a lot of people are still running around with their 4-month rate hold already, right? So they're not too concerned. And the average person, I don't know that they're really thinking too hard. They just hear what they hear in the news. Interest rates are going up, but as long as I can afford, as long as I can get qualified for this amount, I think that's really, for the most part, what most people are thinking about.
Right.
Well,
They want to buy a house. They want to buy a house.
Right, and that's what we're seeing. You're still seeing movement from first-time buyers getting into the game, right? And obviously the luxury market, people who have money, they don't worry about the mortgage stuff.
Mm-hmm.
It's that middle, that
Right.
move-up house
Yeah.
is taking the harshest beating right
Yeah.
now.
So what you're saying is like when you get to that 3, 4, 5 mil, those ones are still moving.
That's a different
Yeah,
sandbox.
they're not worried
Yeah.
about interest rate
Yeah.
hikes and all of that, right? Yeah,
Yeah.
right. Yeah, but when you're in that 1
That
to like, we'll say
middle-ish.
maybe even 2.5,
Mhm.
yeah, that's where they're getting hit hard.
Yeah.
Yeah, I can't move.
Yeah.
Right. I'm at 2-3%. I don't want to be in a 7%, so I'm just gonna stay put.
Yeah, because the person in the townhouse isn't moving up to that right now, right?
Mhm.
Let me sell my townhouse and go into a new mortgage at 1.2 mil on purchase, right?
Yeah, for sure. Okay, let's move on to that first article that you got there, Q. 2 million mortgage holders expected to face interest rate shocks in the next 24 months. That's pretty crazy.
Yeah, that's a lot, right? So they're saying 2024, 2025. So that's going to represent 45% of all outstanding mortgages in Canada going to get renewed in the next 2 years, right? So that's sticker shock for sure, right? Well, what are people at between that range? 1.9 to 3% on the high end, maybe low threes on the high end if you're in that product. But no.
And we've talked about this before, right? So I think this is where I think there's only two things that can happen here. There's only two things that I can see. One is they're going to have to lower the rates. The second one is they're going to have to come with longer amortization.
Which we're starting to see.
Because the banks don't want these homes.
Mm-hmm.
And they're not going to, you think they're just going to let all these homes, or these homeowners just fail?
You know what I wonder? I wonder if the 30-year AM or the 35 or 40 or whatever is that bank policy or is that government mandated? I thought it was gov mandated.
I don't know.
Right? Because the government's going to tell you, well, hey, you can't have these places, you can't have these mortgages amortized to 60, 70 years. Maybe the bank doesn't care because as long as the bank can string you along, I mean, they'll continue to renew you, right? And frankly, they don't want you to pay off the mortgage at the end of the day. I mean, mortgage, it's till you die. This is what
They want
mortgage
the
is.
interest rates.
Sure.
Okay.
So that's what I wonder. I wonder, if it's the 30-year AM because of bank policy, which I don't think. I think it's government.
So then what are you saying? That you think they're just going to let those homeowners walk away from their homes?
No, I mean, I'm just pointing out your point where, are they going to have to increase the amortization rate? I don't think the banks are going to be allowed to do that, is what I'm saying. So therefore, that option is dead.
Man, that'd be blood in the streets.
The government said, what do they say? We don't care about your house.
Trudeau came out and said that. Oh, no, I think he was saying
TIF.
before. But he came back and
Somebody
changed
said
it,
that.
though. He changed his whole tune afterwards.
Well, yeah, but everybody changes
Right.
their tune. Every time you turn around, every time you go to the bathroom, you got a new song.
Right.
So I mean, either way, I believe anyways that it's probably government policy, because at the end of the day, the banks, they just want to lend you money. But then the government says, no, stress test. And the government says, no, you can't, you must check all these boxes before you can lend money, right? It's just became much more stringent. And that's all government policy. The bank wants nothing more than to lend you some money. And you're right, they don't want the homes. So if they don't want the house, well, I got to keep stringing you along. Every time you open the mail, they give you a new credit card.
So then that means what it sounds like what you're saying is that they will lower the interest rates.
No, I don't think so.
There'll be blood in the streets.
I guess it's what it is. I mean, at the end of the day, they want your lettuce to come down.
Yeah.
So, but listen, you know what? And I don't know how you guys think about this, and maybe you guys out there in radio land. I don't really believe that this is all Canada made. As far as the interest rates, right? I think a lot of this is just global, right? So I'm holding this mug right here, right? And I know this mug is going to cost me $2 at the store, but it's made in somewhere else. China in this particular case, but it's made somewhere else. Now you got energy, so we know that that's a big factor, right? To ship it over here, you got to have that oil and so forth to ship it over. But then if the manufacturer has to upcharge or wants to upcharge, there's nothing much I can do if I really want this mug, or if I want that cauliflower, or if I want that computer, right? There's not much we can do. And lowering the interest rates, raising the interest rates here in Canada proper, beyond cooling demand, doesn't really impact the price of a lot of these things, beyond just cooling the demand for them, right? But if the price is what it is, the price is the price, right? And then you look at the U.S., and the U.S. is doing what they're doing, and then you think, well, we can't be too far off what the U.S. is doing because it impacts our trading and it impacts our dollar. All these things are connected. All I'm saying is that, you know, we're just a little puppet in this case. I really don't think that we have any real control over anything. So, you know, by saying, are they going to increase or lower the interest rates? I don't know. Well, let's see what the other guys do.
Yeah.
You know,
it'll definitely be interesting to see what they do and how they maneuver out of this. Because there's obviously going to be some maneuvering that's going to have to take place.
Yeah,
right.
But they make it sound like we're the ones who are really impacting, you know, our own economy, and I don't think so.
Well, there's a whole saying, right, that if when the U.S. catches or sneezes, we catch a cold, right? So yeah, I understand what you're saying.
But it is interesting because U.S. consumers are chugging along, man. Right, they're spending, whereas here we see a little bit of that pullback.
Yeah, but people are still spending. No, we're right that we didn't. An article that we could have put in was, you know, restaurants, and this is the big news right now. The restaurants are hurt. You know, 50% of restaurants are losing money.
Mm-hmm.
Right, people aren't going out, right, for sure. But people are still going out, and I think, like we talked about, they're still using their reserves.
Yeah.
You know, and it's almost, you know, party as usual for some people.
For some,
and they're just
but
using their reserves.
Yeah, not for a lot, that's for sure.
But here's the point, though. We don't manufacture. Neither does the U.S.
Yeah.
Right.
Yeah.
So I'm just saying we're at the mercy of the globe. Is all I'm saying.
Yeah. Let's move on to private mortgages. You got an article there, Q.
Yeah, so, you know, sort of a spin-off here maybe from the interest rate shock people are going to see when they go to renew. So this article is saying when a private mortgage is the only game in town and that's what you got to go to, please have an exit strategy, right? So look at the stat in this article here. The Financial Service Regulatory Authority of Ontario stated that 11.7% of all brokered mortgages in the province last year, that's what it made up, compared to 2014 when it only represented 8.4% of the mortgages brokered. So the increase, if we look in from a monetary standpoint, 25.9 billion last year compared to 9.1 billion in 2014. So what's that showing us? More people are leaning on the private sector. But as you know, we had someone earlier this year approach us, hey, I need some help. We analyzed their situation. Private's not the way for you right now. You should really sell this property, downsize, and just stable. Get your family situation stable. But no, we denied it because we felt it was no good for the client. 100%, I could bet you that there's a mortgage broker or someone out there that threw them in a private, and guess what? In 1 year's time, they don't have an exit strategy.
Yeah.
So they're just prolonging and potentially eating away the equity in their home, where if they would have jumped on top of it, sold, taken that downsized, and be in a much more comfortable position.
Yeah, that's a good point, right? Is that if you're going to do a private, and privates can definitely help you,
100%.
but you also need to make sure you have an exit strategy.
100%.
That's the one thing that we always ask when we're putting people down.
Yeah.
What's your exit strategy? How are you getting out of this? Because all it's doing is chewing up that equity. It's just buying you time.
Yep.
A lot of times,
Yep.
right? And obviously it depends if you're a real estate investor, if you're a homeowner. But if you're a homeowner, it's just buying you time.
Yeah.
Right?
Exactly.
Like, what are you doing at the end of that year that things are going to completely change for you?
Yep.
Or are you doing renovations in your home? Or are you, changing careers and you're taking classes and your income's going to go up significantly? Or, you think prices of homes are going to go up so you can actually, your credit's going to get restored within a year. So you got to understand the whole entire story.
100%. I'd rather disappoint you here today by telling you the truth that this product isn't for you. because it's a Band-Aid. That's what a private's for. Quick Band-Aid, let me fix what's going on, heals up, rip that Band-Aid off, let's go, right? And it'll be interesting how many people with this sticker rake shot get sucked into some of these privates and don't have an exit strategy.
You'll see more of that.
Oh,
for
100%.
sure.
Yeah, let's recap on that 2023 number, 2024 in the future.
You know, one of the things that I heard, I can't say where I heard it from, but they were saying that some of these banks may not even renew people's mortgages at the end of the term. So let's say, you get a 5-year term at the end of the 5, they may actually take a look and say, you know what, you're too big of a risk.
You know what, and that's interesting in the sense that most people will have to stay with their current institution, right? If they want to renew and avoid the whole reapplying with stress.
But that's what
and
I'm
then
saying.
Now what happens to them if their own institution is saying no?
Right, yeah.
Yeah, but so we had this conversation before, right?
Mm-hmm.
And my thought was, yeah, maybe, but again, let's come back. The bank definitely does not want to be selling your house because they didn't renew your mortgage. So if I get it, if you're high risk, in other words, you went and you got 5% down, and what does the bank care? They got insurance. They'll let you run. Again, it's just what I do.
Yeah. On some of the mortgages, right? Yes.
Yeah, but now you've got a little bit of equity because you put down more than 20%, and the price points have fallen, so the value's not there. And the bank is going to say, well, I'm not going to renew you, right? So what does that mean? That means now they're calling the loan is what that means.
Yep.
And now you can't go to another institution, so the bank's going to take the house, and the bank's going to sit on it. I don't know, man. I don't see that as a real plausible scenario.
And you could be right. It could just be tough talk. Right, Bank of Canada's been doing tough talk the whole entire time as well too. But I mean, they did back it up. But you do a lot of times when you've got that tough talk, that does help as well too.
Yeah, and that's exactly one of the things. Well, we know this, but that's one of the other things that we learned at our conference as well, is that you don't even have to do it to actually make it happen, right? Like listen, I mean, okay, take a kid for example. Right, a stern look will correct their behavior.
Yeah.
Right, and you don't even have to do anything. You don't have to.
Right.
It's just a stern look.
Yep.
And that now the behavior is corrected. So it's the same thing here. So again, they don't even have to potentially change the interest rates. They simply have to suggest that they're going to change the interest rates, or suggest any other story for that matter.
Yeah, you just walk with a big stick.
And that curbs behavior.
Right. Just walk around with a big stick, and it looks like you might use it.
Well, look why a lot of people are in this situation. Interest rates are going to stay low for a very long time, right?
Sure.
So it works both ways, right? But just to piggyback on what Chris was saying, the insured versus uninsured. So this article has the amount. So it's just over about 336,000 are the insured mortgages renewing in 2024, where it's 722,000 uninsured renewing.
Okay.
So almost double that renewing that are uninsured compared to the insured.
And I think most mortgages are uninsured, right? I think for the most part, most people end up putting down more than 20% because they're step up or they have the equity or whatever. I think what was the difference there? About half?
Yeah.
Half is insured and half is uninsured?
Yeah.
I mean, double is uninsured, basically?
Yeah.
Yeah.
It'll be interesting.
Okay, cool. Let's move on to UBI, Universal Basic Income. All right, so listen, here's an article I've got right here. It says Canada's taken its baby steps towards a basic income program meant to broadly address poverty. So there's a couple points in here I thought were pretty interesting. So they did this. They were talking about this back in the 1970s, so they flirted around with it.
Hey, you know what? Everything has been already talked about.
Right.
It's already, there's nothing new under the sun.
However, though, did you know this? It was in here, which I thought was actually pretty interesting. Let me see if I can find it here. Right here. Did you know this? 2017, Ontario, under the Premier Kathleen Wynne, launched a basic income pilot in Hamilton, Thunder Bay, and Lindsay. I didn't know that. So the project was meant to target 4,000 low-income people in the target region, giving them up to 17,000 annually for 3 years. But the pilot program was shut down once Doug Ford came in.
What's the source of this article?
Toronto Star.
Toronto Star.
Yeah. So I thought it was actually interesting that he actually did have a pilot version, but they're definitely talking about it again.
Okay, but
What are your
Was,
thoughts?
well, what are the thoughts? Well, what was the outcome of that pilot? I think now that you mentioned Hamilton, I think I kind of remembered that. But in any event, I just want to know what the outcome is.
Well,
I think
Quebec.
he said
Here's another
Ford
piece
scrapped
here too. Well, Quebec launched. Sorry, what's that?
Did it even get off the ground?
I mean, you know, you're right.
Kiboshed it.
You're right. It got scrapped, but because of Ford having come in, or was it already on its way out?
Yeah, it just says the pilot program was shut down. Yeah, so it maybe they didn't even start it up yet, right?
So the implication is that, and don't forget where we are. We're at Toronto Star.
Yep.
Right. So the implication in this case is, whether it's right or not, I don't know, is that Doug Ford shut it down, but it doesn't explain, hey, this was on its way out, or it was because he decided that it wasn't going to work. Right. We don't know.
Well, Quebec launched its own basic income program at the beginning of 2023. The province will pay a base amount of $1,211 a month to Quebecers with severely limited capacity for employment.
So what's that?
So also saying that, well, what it means is that if you are working temporarily or a temporary job, you can still qualify for this program. And those receiving the benefits can earn up to $14,532 a year without having their benefits reduced.
The benefits.
Yeah, so if they're working, they got some benefits, right? The benefits won't be reduced.
Well, hold on. Are we talking about their employment benefits, or are we talking about their welfare benefits?
This is so it's saying for limited capacity for employment. So these would be people who would be working, they've got a temporary job, and this is going to help top them up. Sure. And if it's topping them up, if they've got benefits from their employer,
I don't know. It says won't reduce their benefits. So why would their benefits, employment benefits? I'm talking about like health.
It just says it just says their benefits
stuff. Yeah. So I'm thinking it's probably something to do with like welfare benefits that won't be reduced, because what happens if you work too much. Then they take your benefits away. In other words, you don't get paid as much, or they just cancel it altogether if you're working too much. So I don't know. I mean, maybe I'm wrong, but I don't think this is to do with their employment benefits. I think this is to do with like a welfare or ODSP,
possibly,
kind of benefits.
I think the bottom line is that they're definitely talking about this, and they're definitely thinking about this. Is the only concern that I have with this, and I'm not going to try to get too political here, is I think this is a great way, if Trudeau and his government is able to implement this, to keep them in power again.
Yeah, I wonder if we go back to Kathleen Wynne, if that's what she was hoping to do with her pilot project, right?
Yeah.
I would love to know how this program differs from what already is on the table, and how are we paying for this?
Well, I think it differs because they're saying that they'll give this to you even if you have